Okay, good morning Facebook. We are live. How are you? Hope you are doing well. So it's been a little while since I've done a video like this. We've done a few market updates, but I really wanted to do this video because last time I did one of these, we talked about the subject of staying in a trade. So the title was, Should I Stay in a Trade? And I promised you that I would do part two. So part one, if you remember, was all about people who stick to their rules. So traders who come in, place a trade, stick to their rules, but then after the trade is over, winner or loser, they look at the trade and they think to themselves that they should have stayed in it. So for example, the trade ran on past their target, and with the benefit of hindsight, they're sitting there thinking, well, I should have stayed in it. I should have stayed in the trade. Now, the thing with that is that happens a lot, and the benefit of hindsight, if we all had the benefit of hindsight, we'd all be even better traders. But the important thing with that video was that the assumption was that the trader was sticking to their rules. So they were sticking to their rules, sticking to their plan. And it was the idea that feeling that way about a trade, i.e. wishing that they had a bigger stop, wishing that they got out later, wishing they'd done something different, would potentially affect the next trade. But what we're going to talk about today is the traders who blatantly break their rules before the trade is over. So number one, they don't have a trading plan at all. They make it up on the fly and they say they're going to get out of this level and then they don't. Or even the traders that have a very meticulous trading plan and they go through that, but then once they're in the trade, they get out of the trade or they break the rules. They don't follow the plan. And essentially from a trading coach's point of view, these guys fall into two brackets. You've got the blatant ones, who are the guys that for no reason whatsoever, they will get out, they won't follow a plan. Price will go up towards their target, dip down, and they'll just decide to get out. So they're reacting to the price movement they see. And then you've got the more subtle ones that will react to the price movement, break their rules, but what will happen is they will justify it with something either technically, so suddenly or miraculously they see a resistance or a support level that they didn't see when they were doing their analysis pre-trade, and now that they're in the trade, they're suddenly going, oh, well, there's this support there, so I'm going to get out there, or I'm going to move my stop. Or a news item comes out, and the news is different than they expected, or something has happened, and they use something that comes across more intellectual, comes across more like it's justified to do it. But ultimately, what none of these people are doing are consistently following the rules of their strategy. So I get asked a lot, I get told a lot, people say, Ali, I know I need to stick to my rules, but I really have a problem sticking to them. Or I know I need to be more disciplined, but I'm not. And then the following question comes up, what can I do? Well, to be able to give an answer that is blanket for everyone is very difficult. That's why we coach people in our trading room and we coach people on our 28-day kickstart, because the reasons why people break their rules are not the same. However, there are some things that you can do to really hit on this. Now, the caveat I'm going to make here is every single one of you that's traded, that's listening to this, me included, at some point has broken their rules and blatantly broken their rules. They got out before a target, they've extended their stop, they got out before their stop. The challenge is not whether you do it once or twice over a period of 3 years. It's whether it starts getting into one trade in 10, one trade in 20, one trade in 15. And if that's happening, then it's going to impact your discipline long term. So the first thing you need to ask yourself, if you are breaking your rules blatantly, or even if you refer back to part one of this, where you're having that hindsight feeling, is ask yourself this simple question. What is the stimulus that is causing me to break my rules on this trade? And this is very difficult because very often once the trade is over, traders will sweep that trade under the carpet or say something to themselves like, well, I know I broke my rules, but next time I'll do it. And I always say the most dangerous phrase in trading is just this once. So a better question to ask yourself is accept that you've broken your rules, you haven't followed your plan, and ask yourself, what is the stimulus? And then note down what you believe it to be. Now the challenge here is this involves some form of self-reflection and some form of journaling, which as a trading coach, getting traders to do can be a very tricky thing. So you need to consistently write down, if you know you've broken your rules, write it down, log it on your spreadsheet, and then write down what the stimulus was. And if this happens on a regular basis, what you can do when you're going through and reviewing your trades, which again should be something you're doing consistently, you can look through and see if there was a particular stimulus that keeps coming up. So for example, it might be that you'd had a period of losing trades, say 2 or 3 in a row, and then you break your rules. Because usually what happens is you break your rules for 2 reasons. One, something happens actively whilst you're in the trade. So like I said, a news announcement, something triggers whilst you're in the trade, or it can be that and a combination of what is stacked up before. So to give you an example, I would very much break my rules when I first started out. I would break my rules by getting into trades too soon, but it was always after a losing morning. So when I started out, I was day trading. So when I was trading in the morning, if I had 2 or 3 losers that morning, I would invariably break my rules, not by doing something I shouldn't once I was in the trade, but by getting into trades too early or trades I shouldn't be in. So that's how I used to do it. So what I noticed over time, and I didn't notice this straight away, but what I noticed over time by getting feedback from a coach, journaling, is I noticed that the stimulus for me was in fact that I'd had previous losers. So again, what that means you've got to do is you've got to be rigorous with your trade record keeping and rigorous with your journaling. But within that, you'll find the clues that will be able to help you. So another reason, I think one of the reasons, so people say, well, okay, like, that's great, that's a mechanism, but why do you think people do this? Why do you think people do it? And I think there's 3 reasons. Number one is once you're in a trade, especially if it's a trade that you are watching or paying too much attention to once you're in, is it's being thrown into your face that you have no control over that price movement. The price can go up, price can go down, it can go up towards your target, come back, go into a losing position. It can go straight into a losing position, go all the way up to close to your target, and then fall back. So I think it's really important to acknowledge the fact that you are not in control. The only thing you control is where you put your target and where you put your stop. And for some people, especially in the early days, that can drive them nuts because they're used to being able to control the situation they're in. So some acceptance that once you've placed the trade, you are out of control of that situation. So an element of acceptance of that, an acknowledgement of that, I think consistently over time will help you. The next thing that I think is really important is a lot of traders will trade a strategy that works on paper, or they've done a small amount of data sample, small amount of back testing, and the strategy works, but the strategy performance or the strategy criteria or the way that strategy has to be delivered for it to work, that trader can't work it. So to give you an example, that trader might be looking at a strategy that makes 80% a year, but they're going to be working to a 45% win-loss ratio and a risk to reward of 3.5 times their risk. So a target of 3.5 times their risk. So that trader has got to lose 55% of the time. So out of 100 trades in a year, they've got to lose 55% of the time. And when they're in a winning trade, they've got to sit in that winning trade for 3.5 times what they've risked. So that already has a psychological burden. Now, what can happen in that situation is those traders will look at the strategy overall and say, yeah, the strategy works. But what they don't realize is that strategy might be a little difficult for them because it's too early on in what they've done. Or, this is the really important takeaway from the whole video, this is what I want you to take away, is if they've got the data, the big picture, raw data, i.e. the win-loss ratio, the risk to reward and the overall performance of the strategy, what that doesn't tell them is that doesn't tell them the worst performing period, it doesn't even tell them the worst losing run. So that trader may have no idea about how the losers fall or have fallen over a period of previous live data or previous backtesting data. So this is what I want you to imagine. Let's say that trader is journaling and they can see that after 2 losing trades, what happens is they tend to break their rules, get out a little bit early, start listening to the news, fiddle around with their stops. Whatever the reasons are, they notice that their stimulus is 2 losing trades on the trot. Now, if they've had 2 losing trades on the trot, but they don't know how the distribution of the data is over a bigger period of time, they could be facing themselves they could be doing something really, really simple that's causing them to have these losses, but actually all they need to do is shift something very subtly. And let me explain. If they were able to look at the data, let's say over a 5-year period, and they noticed that the worst losing run for that particular strategy was 6 trades on the trot. So they had a 6 trade losing run. And actually on one of our swing strategies at the moment, we're going through a losing period, and we had 7 losing trades on the trot. So for somebody that doesn't know that strategy over the long term, they will very easily bail out on it or break their rules or fiddle around with it or feel despondent. So let's say that trader knows now, they've looked at the data in detail, that the trade has a maximum number of losers of 6 in a row. But what they notice that's more important is on 7 occasions over that 5-year period, the strategy had 3 losing trades on the trot. So they were able to see that on regular occurrences, that strategy would have 3 losing trades before a winner. 3 losing trades before a winner. And just knowing that means they are way less likely now, after they've had 2 losers, to suddenly break their rules. Because what they now know is they now know the data on a more detailed level. So if you're sitting there and you know that regularly that strategy will have 3 losing trades on the trot, when you've had 2, you're far less likely to break your rules on the 3rd trade, because you know it's normal for that to happen. Because a lot of the time the traders will break their rules, listen to news, change their plan, get out too early, because they've had those 2 losers, and what they're craving is they're craving a winner. But if they know that that's a regular occurrence over a certain period of time, that level of expectation means they are less likely to break the rules, because they have more faith in the strategy and the system they're trading. So that's the big takeaway. So the big takeaway is make sure you know your data, but you know it intimately. And this is something we're going to be talking about tonight at our last experience webinar, or experience workshop. So tonight, for all of our free members, I'm running a experience workshop. So this is for the guys that have done a little bit of trading but are not getting the results they want. One of the things that I'm going to talk about is I'm going to talk about how to look at your data more intimately and look at it in more detail to help your trading performance. So if you're listening to this and you're not a free member, go to tradersupportclub.com, click on any of the Start Right Now buttons and sign up as a free member, and then on your dashboard you'll see a registration link for tonight's webinar. If you are a free member and you're listening to this, make sure you've registered for that webinar, because we'll be sending out the Zoom link and everything this afternoon. So that's all I've got for you today, but I will be back. I may well be back tomorrow, because there's a couple of things that I really want to get across on video. There's some really key learnings, especially with everything that's happening in the market at the moment. So I will be back with you either tomorrow or early next week. Trade safe, and I'll catch up with you soon.